moved out of the city. Okay, give me a second. We're just not recording. So this boat right here, once it moved from one location to the other, that local area, that local economy took a hit. So if you're looking to invest in an area, you want to avoid markets that only have one major employer. So when it comes to military towns, that's one area you might want to avoid, all right? When it comes to my market research, one of the questions I'll throw into Google real quick is how many Fortune 1, 2, 3, 4, 500 companies are in that area? And then after I get some of those answers, I'm gonna dive a little deeper. I'll check down the different job sectors, and then I'll look at how many employees make up those different sectors. So when it comes to, this is a screenshot of Charlotte, North Carolina. You see there's hundreds of thousands of people that are making up every single job sector. So this is a strong market to pursue. All right. So as I'm going through this, you'll notice that at one point we took a high level approach. We looked at the net migration patterns, which influences population. And then we're going to look at job diversity. Are there jobs in that area? Once I figure out that both of those put a check in the box, I'm going to look at that neighborhood. So let's say we're all real estate investors on this call. You just got sent a property either from a commercial broker or a real estate agent. Before you dive into it, you're going to make sure that the neighborhood that property resides in is sufficient. So some things to note about neighborhood classes is they're graded off of a few different things. So just like in school, we receive grades. Real estate properties in the neighborhoods that they're in receive grades too. So each property, each neighborhood is going to receive a grade A, B, C, and D, usually based off 4 different factors. The properties themselves, the affordability, the amenities, and the livability. So when it comes to Class A neighborhoods and the tenant demographics, you're talking about doctors, lawyers, high network individuals are going to reside in Class A areas. Now, these neighborhoods are usually more pricey. Class A neighborhoods might have a Starbucks, a Trader Joe's. They might have a shopping center in the near vicinity. There's also access to parks, open spaces, and great schools in these locations. These neighborhoods have low crime rates, and they also have a sense of pride. So when I picture Class A neighborhoods, I picture well-manicured properties. If you just picture like someone took scissors to the grass and just make sure they were all lined up properly, that's how I picture Class A properties. And when it comes down to Class B properties, or I'm sorry, Class B neighborhoods, those are homes and working class. So you're talking about like the teachers, firefighters, and nurses. They have close proximity to local amenities, jobs, and good schools. And the crime rating in those neighborhoods is relatively low. Moving on to Class C neighborhoods, the general population within Class C neighborhoods is mainly labor workers. So you're talking like construction workers, hospitality, so like people that work in the restaurant industry. You're gonna see a lot of discount grocery stores in these areas, a lot of thrift shops, and the average to below average schools. Class C neighborhoods routinely have more crime, but typically they're nonviolent, okay? When it comes to Class D, this is what I refer to as a war zone area. So properties that are gonna have a whole lot of like graffiti riddled, boarded up properties, higher crime rate, which is also a direct relation to lower income. All right, so once we identify that the neighborhood the property is in, now we want to take a look closer into that property. So real estate property classes are determined by a few different factors: the locations, the age, and the overall condition of the property. And it's important to consider all of these things when you're doing your due diligence. So Class A properties, when you look at these buildings, they're going to be newer. When you go inside of these buildings, they're going to have higher quality finishes. So you're talking like the stone countertops, either granite or marble, and then the amenities that they offer. Now you're talking like the swimming pools. Maybe they have valet trash. Let me see, I'm letting someone in. Pardon me. So you're gonna have like valet trash. Maybe they have a swimming pool. They have state-of-the-art gym equipment. The tenants that occupy Class A buildings are gonna be more affluent. And you're gonna also notice that there's above average rental price when it comes to Class A buildings. When it comes to Class C buildings, I'm gonna skip B for now. You're talking about buildings that are older in age. They're in less desirable areas, maybe 20 to 30 minutes outside of the downtown metro. And these areas, these properties are going to need a lot of repairs, renovations, and updating. With Class C buildings, you're going to have lower rents. So it's going to attract a different tenant base. So when it comes to the property classifications, this is a great point to talk about the investment strategies that you could deploy. So when it comes to a core investment strategy, that involves acquiring stable, high quality, and income generating properties in prime locations. So if I'm targeting prime locations, I'm most likely not going to be targeting a Class C building, and vice versa. If my plan is to increase the value of that building by a value add plan, which involves buying properties that require significant improvements, me targeting a Class A building is most likely not going to fit with that investment strategy. So it's ideal when you're looking at the property to align your investment goals. With this next slide, I'll put this together just to get an understanding of some of the goals that people have, some of the reasons that people have. And I'm going to ask you, if you don't mind, drop in the chat which building you would particularly see yourself investing into. And before you do that, let me explain to you the different reasons why people would want to invest. All right. So when it comes to cash flow, someone might want to invest into a building for cash flow to generate consistent rental income and potentially achieve financial stability and passive returns over time. When it comes to appreciation, someone might invest into an apartment for appreciation with the goal of capitalizing on potential property value growth over time. When it comes to capital preservation, everyone, you could look it up right now when it comes to the rate of inflation. Your money sitting in the savings account is losing value every single day. You can go to the grocery store, put 5 things on that conveyor belt, and the price is going to come out to be $300. It doesn't make any sense right now what's going on with inflation, but some people choose to put their money into a tangible asset so they don't have to worry about it losing value in their savings account. When it comes to investing for tax advantages, it's so powerful. When it comes to the benefits from deductions through cost segregation studies, property depreciation, and potential a 1031 exchange, which can greatly reduce your overall tax liability. And when it comes to scale and efficiency, someone might invest into an apartment building for scale and efficiency to leverage economies of scale, streamline property management, and potentially enhance profitability through managing multiple units within a single property. So if you don't mind, just drop in the chat what property aligns with your investment goals and what reasons do you have for investing. So if someone were to ask me this, in today's climate, I would invest in a B class property. So right here for capital preservation. All right. Give it a couple seconds. I see you got cash flow 2 and 3, we got B class. I definitely appreciate the feedback. All right, move on. All right. So when it comes to investment strategies, this is not the subject of this conversation. However, I do want to let you know that when it comes to our investment strategies, our process, how we identify opportunities, how we acquire income producing properties, how we improve those properties and then exit, or building relationships with property managers, building relationship with the top brokers in any market. I would love to have that conversation with you. So I just wanted to put this on here. My calendar, if you see, is wide open from Sunday to Saturday. For most of the day, I'm available. You can either shoot me a call or a text. This is my cell phone number. This is my work cell phone number. You can email me if you have any questions. And this is my calendar link right here. So if you do have any questions about investment strategies or how to conduct proper market research, I'm available. All right. But let's get back into doing the proper due diligence. All right. The purpose of knowing median household income when it comes to your subject property is very important. All right. So I listed out a few different reasons, but let me go into more detail. When it comes to conducting your market analysis, median household income is a key indicator for the overall economic prosperity of that general area. Investors can use this data to gauge the purchasing power and the disposable income of residents. Higher median incomes often indicate a more affluent population that might have a greater spending capacity, which could be beneficial for businesses and real estate investments targeting higher end areas. When it comes to the target market or the target audience, understanding the median household income helps investors identify their potential customer base. For apartment operators, which Excite is, this information helps us tailor our marketing strategies and product offerings to match the spending habits and preferences of the local population. When it comes to the economic stability, we're going to look at the median household income for higher medium household incomes can indicate a stable and resilient local economy. One way I go about searching the median household income in an area is by I go to Google and I type in bestplaces.net and I just type in the zip code of the subject property, and it's gonna let me know the median income, the population in that area, and then the cost of living compared to the national average. This right here is a screenshot of VestMaps. Is another one that I bounce the median household income off of. So what I like to do is I like to bounce a few different data points off. So if I'm looking at the median household income, I'm going to get it from a few different places. So not only am I looking at the income for the zip code, I'm going to make it a little bit more granular. I'm going to bring it down to the block. So that's like the square mile around my subject property. And then eventually I'm going to look at the street. So using tools like VestMaps, you're able to identify what areas have a more affluent tenant base. All right. When it comes to the crime rating, this is another thing that is very important. The last time I was doing a capital raise, that was one of the most frequently asked questions. What are the crime and school ratings in that area? People do not want to invest their hard-earned income into areas that they personally wouldn't want to live in. And when it comes to crime, the purpose of knowing this, it's important for several different reasons. Some of those reasons are safety and security. Investors want to ensure that the safety of their assets. Tenants want to make sure they're safe. Knowing the crime rating in an area helps us assess the level of safety in that area and can influence decisions. When it comes to the tenant and investor confidence, this is what I was just mentioning. A low crime rate can attract tenants and investors. A high crime rate is going to turn those people away. People generally prefer to live, work, and invest in areas with lower crime rates, and this positively impacts occupancy rates. When it comes to the property values, crime can directly impact property values. High crime areas often have lower property values due to the decreased demand. And this is another screenshot of VestMaps. It's the tool that I keep mentioning. I use it every single day to do my market research when I'm doing my due diligence. Crime is crime, right? The people who are adding to these statistics, they don't value anything. They don't value hard work. They don't value your property. They don't value lives. But one of the things that I look at when I'm breaking down the crime index is the property index or property crime index. So if I look at this line right here, the national crime index is at 100. So for this subject area, it's well above the national average. So if I came across a property in this area, that would put a red flag up. And then along the same terms of crime ratings, people want to invest in areas, people want to live in areas that have good school ratings. So school ratings, just like crime, is another thing that I pick up, or I'm sorry, I research. I go to VestMaps. There's some other free methods to use. So if you're familiar with realtor.com, Zillow, Trulia, any of these things for residential homes, typically, if you scroll at the very bottom of the listing, you'll see that the school ratings. So what VestMaps will do is say that this property right here was my subject property. It's going to pull information from the closest schools in that area, and then I'll just add all these up and then get the average, and that's how I go about my school ratings. All right. So this presentation slide is called the Starbucks and Costco Challenge. I'm gonna get to the challenge here in a bit, but before I do that, let me just dive into some of these bubbles that are right here. Investing in areas with a popular retail chains like a Starbucks or a Costco can offer several potential benefits for real estate investors. When it comes to research and the due diligence, the presence of a Starbucks and a Costco can indicate a well-researched area. Before investing, you can leverage the due diligence that these companies have already did. Starbucks and Costco are spending millions of dollars every single year prior to building a location. So when it comes to the tenant attraction and retention of tenants, if you're investing in rental properties, having a Starbucks or a Costco nearby can be an attractive selling point. It can enhance the perceived value of the location. And when it comes to the desirability of a location, Starbucks and Costco often choose prime locations for their stores, considering factors such as demographics, visibility, and accessibility. Investing in areas with these retailers can mean access to well-located properties that are likely to attract higher quality tenants. And when it comes to the long-term stability, Starbucks and Costco have demonstrated long-term stability and success as businesses. Investing in areas with these anchor tenants can align with the strategy for long-term steady returns. So my challenge for everyone that's joining this call is I challenge you to find a Starbucks or a Costco that's in an area that's not well-established or up and coming. You're just not going to, all right? Like I mentioned, Starbucks and Costco, they spend millions of dollars every single year to find the prime locations. And so once again, if you find a Starbucks coffee or a Costco wholesale in an area that's not up and coming or well-established, please send it my way, because I would like to dive deeper into that, because they most likely know something that we don't know. So to summarize this, this page, it's important to note that while the presence of a Starbucks or a Costco can be a positive factor, it's just one consideration among many when evaluating an investment opportunity. Thorough due diligence, market research, and a comprehensive understanding of the local market dynamics are crucial before making any investment decision. All right. And just to summarize some of the filters that we apply when we're conducting our market research, and if you type Dropbox into the chat, I'm gonna get you a Word document that I've been working on for the last few months. Anytime I find a report that has to do with market trends, I put eyes on it and I'll download it. And I've been just collecting that folder. And I also have a working Word document that breaks down all the resources, all the tools that we use to look at the population trends, to look at the net migration, job diversity in the list. But just to go down it, when you're looking at population trends, you can just do a quick Google search. Type in your subject property followed by the word population, click enter, and it's going to tell you the population trend. Is the market you're looking at, is it in an incline? Is it in a decline? Is it stable? Net migration, that's not something that if I get sent a property, I'm not looking at the net migration of that property. That's one thing I maybe do once a quarter at most. When it comes to job diversity, it's important to know that not only the diversity of jobs, but are there jobs growing? One thing I've been noticing lately, if you look at states like Texas, Tennessee, Georgia, and follow some of these electric vehicle factories, those nearby areas, those nearby markets are blowing up. So when it comes to job diversity, that might be something that you want to keep on your radar. When it comes to the neighborhood classifications and properties, I use REI indicator. REI indicator allows me to type in an address of my subject property, and it's going to let me know a little bit more about that neighborhood. When it comes to median household income, we just dived into it, but there's several ways you can find the median household income. You can use websites like datausa.io. You can use websites like bestplaces.net, neighborhoodscout.com, vestmaps.com. These are all resources. Some are paid, some are free, that you could type in your subject property and then get that information. And then same with crime and school ratings, data, usadata.io, vestmaps. If you Google Charlotte crime, reports will pop up. If you Google what's the best schools in the zip code, that's another great way to see if the market that you're analyzing is a good market to be in. All right. So we talked about population growth. We talked about school ratings, crime ratings, the median household incomes. If that population is growing, what's the neighborhood class? I took a screenshot of this. This is a tracker that I use that works. Several inspiring investors, active investors have reached out in the past to get this. So instead of reinventing the wheel, because with real estate investing, you don't have to reinvent anything. If it's working for someone else, take that wheel and customize it to your needs. So we need to be focusing on income producing activities. You design an Excel sheet to hold all your data is not worth your time. Once again, if you drop Dropbox into the chat, I'm gonna make this available to everyone. So you could just plug and play. You could take this and you can run with it, all right? Like I mentioned, I use this every single day to just organize my data in a way that I could see that in Georgia, in this particular zip code, is not attractive. It's filled with D-class properties, or is it neighborhoods with D-class? So that matching it with the median household income, red flag, I'm no longer pursuing that property. So Dropbox in the chat, I'm gonna give you some resources. All right. This is I would say a rhetorical question, but at the same time, what do you look for in a market? If there's anything that I did not discuss that you actively do when you're conducting your due diligence, I would appreciate if you drop it into the chat just so I could sharpen my tools, you know? So I always heard, going back to like the 9th grade, I don't remember what class it was in. I feel like it was a business class, but they mentioned that the most important thing is location, location, location. So how are you making sure that location is in the incline? How are you making sure that that market that you're about to employ your dollars in is a good market? One of our target markets, and this is sort of going to tie a bow on everything that we've been discussing, is Charlotte, North Carolina. Charlotte, North Carolina has not only had historical growth, it's projected to have massive growth over the next few years. People are attracted to Charlotte, North Carolina for a plethora of different reasons. The university that it has, the Fortune 500 companies that are in the Charlotte area, the healthcare industry, hundreds of thousands of employees are in the healthcare industry in Charlotte. That's a strong demographic that I'm going to be targeting when it comes to my market research, the restaurant industries. But if you look at a map of the United States, Atlanta, Georgia, some people say it's like the Hollywood of the South. Washington, D.C., the capital of our country. Between those two major metros, Charlotte, North Carolina is the largest between those, all right? And then one of the things that I love looking up is, excuse me, I took a trip out to Charlotte, North Carolina last month to go look at 5 different properties. It was a Class C property, a few Class B properties, and 2 Class A properties. But one of the things that the broker hit me with, it was a stat he just randomly threw out. He was like, yo, on average, 180 people move to Charlotte every day. I'm like, what? I've never researched that before. Not until I had that conversation with that broker was I was like, man, let me start looking that up. So if you're interested in a target market or you want a market to be your target market, research how many people are moving there every single day, because those same people are going to be your ideal tenants if you're a real estate investor. All right. If you received any value from this presentation, I know we talked about a lot of things. Probably due to my nerves, I flew through a lot of things. So if you have any questions, please let me know. But I highly encourage you to join our community. It's free. We hold meetups like this every single month. We go over any topic that has to do with real estate investing, mindset, how to build generational wealth, are topics that are discussed during this meetup. So just text the word wealth to 301-265-2056. And anytime that we have an investment opportunity, you'll be the first one to know. Also, by joining our community, you'll have a one-on-one call with our investor relations team. And with that call, what you can expect with that call is just to align your investment goals with potential properties. So if you're investing for cash flow or appreciation or to preserve your capital, or you make so much money in a year that you need to deploy some tax strategies to reduce your income, that's going to be discovered in that phone call. And then when we have a property that matches that, you'll be the first one to know. So once again, just text wealth to 301-265-2056 and join the Excite community. All right, I'm wrapping this presentation up, and I'm pretty sure some people in the audience is wondering, why is this picture here? What does this have to do with market research? What does this have to do with due diligence? But when I look at this picture, it reminds me of an analogy that I've forever had when it comes to this job. And when I'm receiving all these properties from these brokers and I'm doing my market research, I'm going through a lot of properties. This picture right here is of a gold pan, or sifting through gold, sifting for gold. As I'm going through these properties, I'm going through the dirt in this analogy. And when I find that nugget, how do you know that you have a nugget? Let me back up some, because I'm getting ahead of myself, because I'm really excited about the next slide, but let me stay on this one. Once you're going through all this dirt, the satisfaction when you finally find that gold nugget is unbelievable. But you got to prepare yourself to do right by that gold nugget. And when it comes to apartment investing, doing right by that gold nugget is by underwriting it. Underwriting apartment buildings refers to the process of evaluating and analyzing various financial, operational, and market factors to determine the feasibility and the potential profitability of that investment. So if you're interested in learning more about apartment investing and how to analyze apartment buildings, because I'm telling you, this asset class is so powerful, what it can do for not only you, not only a community, generations to come. Man, on that very first slide about me, I didn't even talk about it, but one of my biggest motivations, and I'm just gonna slide to it real quick, just so we can all be on the same page. But it's Proverbs 13:22. All right. When I wake up in the morning, I'm trying to actively fulfill Proverbs 13:22. All right. I mentioned that I'm a God-fearing man. A good man leaves behind an inheritance, not only for himself, but for his children's children. All right. So my children, 7 and about to be 2 years old here in a couple of weeks. I have a lot of work to do before I can leave them behind a proper inheritance. And I personally have identified that apartment investing and the company that I'm with currently uh, is that path. So let me catch back up to that gold nugget. So if you want to know more, I encourage you to join our free class to become an underwriting warrior. If you're interested, type the letters UW in the chat, and I'm gonna add you to that list. And what you can expect is an intro to underwriting. We're gonna break down full underwriting and analysis. We're gonna teach you about multifamily loans. We're gonna teach you the proper due diligence. Some of that stuff I talked about earlier today, where I'm gonna take it a step further. I'm gonna let you know how to build relationships with the top brokers in any market. So if you want like endless opportunities in your inbox, come join us tomorrow. It's the first class of this session. It's every other Tuesday. And like I mentioned, it starts next tomorrow. So if you want to understand investor returns or if you have any questions, they will get answered. Manny, he's our class leader. He does an outstanding job breaking down these complex terms, these complex scenarios into simplified ways that the average person, the novice, the inspiring investor can come in, learn, take something from it to impact, like I mentioned, not only yourself, not only a community, but generations to come. All right. So with proper due diligence, with analyzing markets properly, and then once you get that opportunity by underwriting it and seeing the potential in it, getting that offer accepted, this is what it can lead to. All right. So over the last 4 years, Excite Capital Investments, we have acquired $168 million worth of assets under management. And this is just an overview of our portfolio. All right. And with this, none of this could be done if it wasn't for our active investors and our passive investors. So I just want to take a moment to express my heartfelt gratitude, because I would not be here in this chair in front of you today if it wasn't for the investors that we have join us on the property groups. Without them, we simply wouldn't be here. Their unwavering support, trust, and commitment to our vision have been instrumental to our success. So I'm honored to have such a fantastic group of investors who believe in our mission and share our passion for real estate investing. Our investors have not only helped us grow as individuals, they've helped our business, and they helped us create opportunities for others. Their investment has allowed us to expand our reach into new investment properties. They've allowed us to make a positive impact in our community and the world. So I just want to say, any investor that's on this call, I truly am thankful for you. When I was just last year at this time, I was preparing to get out the military. And I did not know my path. And I was trying to lean on my own understanding, and I didn't. And if it wasn't for those investors that have joined us on those property groups, Excite Capital wouldn't be a thing. And if there, I would probably be not homeless. I would have found something to do. I would not be doing what I'm doing now. For the longest, I thought that air traffic control was going to be my path. I thought it was my dream job. And I remember when I got an email from the FAA saying, "You've been accepted." And I was like, that's not what I want anymore. Let me go to this next slide. These people who are on this screen right now, I want to work with them. They showed me things that I've been researching. So my last couple of years in the military, I was doing a lot of reading. So Rich Dad Poor Dad by Robert Kiyosaki, Think and Grow Rich by Napoleon Hill, The Go Giver by Bob Berg, who we've had on this platform before. And I'm thinking, like, what I'm doing in the military, even though I strive to be the best I could every single day, it just was not cutting it. If I want to build generational wealth, being an air traffic controller in the United States Navy was just not enough. Me getting out the Navy, I did not know where I was going to be. Joining this team has been a godsend. It's been a blessing. I'm so fortunate that I get to work with these individuals every single day. And I just want to say thank you to them and thank you for you. So if you stayed with us this whole time, I'm about to end this presentation, but we're going to open up the networking event. I just want to say thank you so much. I know I was rambling, going on, stumbling over words, but I hope you got something from it. If you ever want to, let me exit this. If you ever want to learn more about proper due diligence or how to analyze a market, I'm going to drop my meeting link in the chat, but please feel free to utilize it. Like I said, I'm open anytime. So let me come back to everyone.
Awesome. Thank you so much for that, Miles. That was an incredible presentation. I actually did learn a couple of things too that I didn't know before, believe it or not. That's the beauty of this. Like even for those of us that have been in this path for a long time, when you go to these meetups, when you go to listen to talks from everybody from every level of experience, you still learn a few one or two things from the talks. And I truly enjoy the interactive part of this. I think that's something that's been missing from a lot of our meetups. So thank you, Miles, for certainly introducing that part. And you talk about how we inspired you in some senses, those of us that worked at Excite Capital. And I think I speak for the entire Excite Capital team to say that you have been a great inspiration to us and a great just addition to the team. You bring such an amazing energy. And I think I told you this before. This is one of your superpowers, and you gotta lean into it. So, having said all of that, I think a lot of people are still with us. 28 people. It's a lot of interaction to be had on this talk. I think as far as you have any questions, we want to be able to answer them. I think Miles is more than capable of addressing those questions, and certainly we want to give some and anyone else who has comments, we want to bring you in to be able to have those, yeah, bring those comments in. Miles, I think a few questions came into the chat, so I'm just going to go ahead and ask those questions, and so that we could address them for you. um so the first questions came from Mr. Hill, Winton Hill. So are there any kind of investment strategies that you would invest in areas with higher crime or lower school ratings?
Dr. Arnn, I'm gonna choose not to answer that. That's my bigger brother. He'll be okay with it. So when it comes to areas that are associated with higher crime rate, lower income, you're talking about Class D areas. So Excite Capital, 9.9 times out of 10, we're not going to invest in a Class D area. There are investment strategies tailored to properties that are in Class D areas, and that investment strategy is more of an opportunistic. And you got to have a heavy heart and a heavy stomach to deal with properties like that, because so many things pop up. So I would stick to Class A, B, and C properties.
I couldn't agree more with that assessment. However, just like I always say in the past, without risk, there's no reward. If you're willing to take the higher risks associated with those types of investments, then there's a good likelihood that you could potentially also gain quite a bit of reward even with those. I've heard of folks who've had to either have some private security when they're going to collect their rents door to door in some neighborhoods, or similar stories, but that's not the type of business we in. But there's certainly an investment strategy for everybody. Dr. Annie asked, how about landlord versus tenant friendly states? Do you factor it?
Dr. Ani, absolutely. And not even like subconscious, this is just subconsciously. So Florida, South Carolina, Texas, Alabama, a lot of our target markets, they just happen to be landlord friendly states. But if you notice that net migration pattern presentation slide I had, a lot of those states that lost a lot of people happen to also be tenant friendly states. So it's really interesting. I'm not sure if it's like correlation or causation, but when I was doing some research on net migration patterns, a lot of the states that have negative net migrations happen to be tenant leaning. And I think one of the reasons is because of COVID-19. And a lot of those states, people were not getting paid. Like you could go to the government and be like, my tenants aren't paying me. Can you give me a check? But those tenants did not have to pay during that pandemic. So a lot of people lost out in those tenant leaning states.
Absolutely, I couldn't agree more. And I have no additions to that.
Yeah,
wait,
I can add
yeah,
to that. Another
go
thing
for
just
it.
to think about is like the tenant friendly states kind of encourage investments. So a lot of investors will move to those states and kind of infuse money into that economy. So the economy grows as a whole. And I think that's why California is struggling right now because a lot of businesses are kind of moving out just because the laws do not favor businesses and investors like sponsors. They're technically businesses as well, so they tend to drive where the government favors the developments. So
Absolutely, couldn't agree more. Thanks for that addition, Manny. And I think I'm trying to monitor the chat right now. There was one comment from Miss or Mr. or whoever I think Oyenike Kelanko, who says, I hope it's not too late to get involved as an investor. And the answer to that is no, it's absolutely not too late to get involved. Miles, if you could pull up your chart with the number that people can send send wealth to, that would be awesome. If you send the name wealth to that particular number, you'll be one of the first people to see the next investment opportunity that we. Oh, it's Dr. Kilanko. Fantastic. And it's a her. Thank you, Dr. Kilanko. Appreciate you. I think the only other question that I'm missing, if I miss any, what about investing in opportunity zones? That's Mr. J Media or Media. I hope I'm not butchering your name, but if I did, my apologies.
What was the question again? I'm trying to find that one
Uh,
page.
what? So I think Jay was asking about what about investing in opportunity zones?
So one of the things that I noticed with opportunity zones, they're going to be right. So it's very interesting. And let me pull up that REI indicator screenshot. Here it is. All right. So let's just say, I wish I could zoom in. So do that. All right. What I've noticed with opportunity zones, it will be a class D area. So we're talking about the blue. Let me zoom in a little bit more for y'all. Is an opportunity zone, it would be like a class D area, butted up right against a class A area. So, and I'm hesitant to use the word like gentrification or anything like that because it's so polarizing. But I like the term because it's like progression. A city is actively trying to improve an area. There's nothing wrong with that. But a lot of opportunity zones are currently in class D areas. So it's just something to take in consideration.
Absolutely, I couldn't agree more about your response. I think opportunity zones are really designed as an economic development tool that allows people to invest in distressed areas in the U.S. So it's the right investment strategy for some people, but we try to be laser focused at Excite Capital. We know exactly what we are trying to do, and at some point, it is possible that we may diversify into other investment strategies, but for the most part, we are laser focused on our investment strategies which is to do value add or core plus investments in growing markets throughout the US, but particularly focused on the Southeast US. So that's been our focus for the most part. So in the absence of any additional questions, if we could go right into the introductions or meetup or networking part of the meetup. Typically, we do this meetup for an hour, 30 minutes. The first hour is this, presentation, answering questions, and that we've done so far. The last 30 minutes usually is to just get as many people that want to come and introduce who they are, what they're doing, what their thoughts are about either the presentation or their overall investment in real estate or other things. So please, yeah, and preferably if you can come on camera, that would be great. We usually let those folks that could come on camera go first. But if you're not able to come on camera, then that's okay too. You could still unmute yourself and just introduce yourself and talk a little bit about, maybe what you learned today or what your experience is, or introduce your company if you have a company. Those are all acceptable things. We just want to get to know you a little better and know who you are, what you're doing, and how you intend to maybe take some of the information from today and implement it in your respective lives and businesses. Anybody interested in jumping up and introducing themselves? People are shy today. It's okay. Well, I'm not gonna pick on anyone to do it. If oh, there we go. Jay just came on camera. This is fantastic. Please unmute yourself and introduce yourself, sir. I think you're getting it
Yes,
started. I'm sure other people will join us shortly.
yes. I'll kick it off. I'll kick it off. My
Take
name
it,
is Jay Madier. I'm happy to be
Nadia.
here. I am a business and financial coach. I'm also a finance intermediary, so help to arrange financing for real estate projects, commercial projects. So anything except residential homes, I can
Beautiful.
work with that arena. And I'm very interested in getting involved in the community, just from my own personal uh, uh, needs, just further the education. I'm looking to get involved in some multifamily projects, looking for cash flow and preservation. So just just really interested in what you guys have to offer. It's a great, sounds like a great program, and just look forward to being involved.
Thank you so much, Mr. Madia. Really appreciate you. Thanks for the comments and thanks for actively participating in the chat. We certainly look forward to having you join the community and hopefully partnering with you on one of the upcoming projects that we're going to have available. Unfortunately, currently we don't have a deal, but though that deal is coming very, very soon. Obviously, the macroeconomic conditions of the country right now has made it really difficult to find great deals in our target markets. But we've been hard at work. We've reviewed hundreds and hundreds of deals, and we've put in, close to, I think, over the last 6 to 7 months, probably close to 100 LOIs. That's letter of interest, and so
Mhm.
we are working hard to get that ideal deal to our community of investors. Once you locked once you're part of the community, you'll be one of the first people to get to review the deal. So make sure you sign up and for either our investor club or send the world wealth to that number that was put up, and we'll be more than happy to incorporate you as part of the community. Thank you so much. Really appreciate it. Anyone else wants to comment?
Yeah, I just wanted to add real quick that Miles, that presentation was outstanding. I've been officially replaced in exact, so so that's what I'm
Ab-
appreciate it.
ab- abs- Absolutely. Yeah. Yeah, Mr. Tenny Tolafari used to run our acquisitions efforts until Miles came in and it's pretty much taking over at this point. So thanks, Miles, for all you do. Anybody else wants to uh, you know, comment? Dr. Baker, feel free
No,
to comment.
I did have a comment about
Yep.
the opportunity zones. Would you
Yep.
guys be considered looking at opportunity zones?
Yeah.
Although
So
they may be in the C,
distress
D
there.
category.
So yeah, so I was commenting earlier that we have not necessarily looked at them as much because most of them are in distressed areas,
Mhm.
but for the most part, you know, we are laser focused on A, B, or C areas and mostly value add and core plus investment strategies and but the hope is that at some point once we've amassed a significant um, uh, um, uh, uh, portfolio using the current strategies that we have, we'll have the opportunities to start diversifying now into other types of acquisitions in different types of zones, like our opportunity zones, but also things like development, in different areas. So I think we are a fan of using multiple strategies, but right now we're just laser focused on the current strategy that's been very successful for us. Thank you. Awesome. Yeah, it seems like oh, there you go. Awesome. Doctors Bakers are like here listening in. Thank you so much. Um, any other person? Any other person wants, don't be shy. Any other person wanna chat, comment, any questions? Dr. Azia Mama from Phoenix Capital. Any comments?
I'll make a comment.
Yep, please go for it.
I just wanted to say, Miles is fantastic, and I really enjoyed the presentation. What you guys don't know is that Miles like helps me out with a lot of information. So like, I don't even have to reach out to you guys. I can just be like, Miles, I need this and that and that, and he sends everything to me. So like, he's a true testament to like what you guys are, and never like hesitant to share information or to teach whenever he can. So this truly is like what he's about. So yeah, so I don't have any specific comments. I just wanted to say thank you, Miles.
Okay, no,
That's
Dr.
true.
so much.
That's awesome. Thank you so much for sharing those comments, Dr. Mama. Yeah, Miles is outstanding, but he's also practicing one of our core values, which is of growth and abundance. We truly believe that there's more than enough out here for all of us to do fantastically well, and there is no reason ever to get kid. And so we are more than happy to share abundantly of any knowledge or whatever we've got so that we, as many people as possible can benefit from the great benefits of investments in real estate, particularly multifamily real estate. So thanks for those comments. Any other questions?
Yeah, Dr. Lynn, we just got a question in the chat. It was asking,
Oh,
is it
fantastic.
available as a recording? The
Oh,
very
yeah.
beginning of the Zoom got cut off, but the majority of the Zoom will be uploaded. And the fact that you registered for this meetup, you will get emailed. And along with that Dropbox link that I'm going to be sharing with everyone, I'm going to drop this presentation in there as well. So
Awesome. That's going to be super valuable. Any other comments, questions, anything? If there are none, I'll be more than happy to give folks some of their time back. but before then, I want to kind of give folks an opportunity to ask questions or make.
Can you set the table, Joey?
Oh.
Yeah,
Thank you.
I think somebody's setting the table. I think in the Baker household, it's
Ronald took his phone off mute. He's right there.
oh,
Everything.
Of course, it's the husband's fault. As
Of
always.
course
Like,
it is.
Yeah, and
It's
you married
okay.
her.
Dr. Baker, how are you? How's it going?
Fine, what's going on? Hey, I do have a question. Like if we're calling miles or looking at underwriting, how big or how small property can we call in to ask those particular questions we have?
I mean, we are more than happy. Typically, when it comes to a deal that us as Excite Capital are trying to work on, we're usually looking at like deals that are probably like 100+ units in particular. But if you just want some insight into, some thing you're looking for and you want to touch base with Miles and get some feedback on that, I mean, it's whatever it is, it doesn't really matter. We're more than happy to provide as much value to you within reason, as much as possible. So just reach out, ask the questions. If he doesn't have the answers, he'll reach out to anyone else who does, and we'll all work together to make sure that we're providing the most value to you as a valuable member of our community.
Okay, thank you.
Hello, Dr. Oni.
Yeah, please go for it.
Hi, this is
Dr.
Dr.
Kalanko. Yeah,
Yeah.
absolutely. Please go for it.
Yeah, so thanks for the opportunity to interact with the other interested parties. Coming across this kind of through another networking experience with another physician, and seeing a lot of physicians are going this route. I think some of my inquiries kind of hinge off of the last speaker's inquiry, that you are dealing a lot of syndications, large scale, and that's good. But for those of us maybe who want some more ownership, especially as a way of diverting our incomes, like, do you offer some guidance? I think you said Miles can offer like some kind of guidance, but what has been your experience? I know it might not be something you're tailored to do, but for those of us who might also want to add that to our personal portfolios, what would be your suggestion?
That's it. So, I mean, our focus is mostly acquisition of large apartment buildings and apartment communities. So that's where our true expertise lay. However, we encourage any type of multifamily investing, and in whatever ways that we can support, we are more than happy to. We do have a coaching program that involves essentially all of the Excite Capital co-founders, essentially teaching folks how to go ahead and start buying multifamily apartments. And if you want more information on that, we are more than happy to provide the information on that. But if it's just a one-off, just want to ask a question here or there about something that you're looking at, oh yeah, definitely. We at Excite Capital are more than happy to, if we have the information, the answers to the information, we will provide it to you.
Thank you. I think.
Go ahead. You were going to say something, Dr. Kalanko.
Yes, I think both of them would be helpful. The coaching class, and the occasional question from left field.
Absolutely. And what the beautiful about the coaching program will be that it's all encompassing. So built into that is it's a more consistent check-in with you to make sure that you are achieving the level of success that we set out to do at the beginning. We are also in the process of working, because we realize the need for this in our community. we're working currently on a multi-family course called Excite Capital Multifamily 101 that we're going to be rolling out soon. So that may be a good starting place where you know, just to completely understand the A to Z of multifamily, either if you're trying to do it small time or you want to join a large syndications like ours. And if you want to be active versus passive, there's different pathways in that multifamily course. So I may even suggest that maybe you just hang on a tiny little bit and review that course and then decide for yourself what pathway is best for you. But either way, we are here for you. It means a lot to me that you've joined us and you're part of this community now, and you are interested in learning how to acquire your own multifamily.